Hey, it's Clay Trader, and this will be a video chart on ticker symbol AVIR. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So all this here may look like several days worth of time. It's actually just today's price action broken down into 30-minute time slices. I like through this time frame. I think that's a good job of telling the quote-unquote story of the price. And in this situation, makes summarizing the price action pretty straightforward. So if you say, Clay, look, summarize this for me quickly, I would say pump and dump on thin ice. Now, before you start throwing stones, I'm not saying pump and dump in the sense that this company is being run out of somebody's bunker over in North Korea. I'm just making that statement based solely on how the price has acted. And what is my definition of a pump and dump? That a price makes a really nice move, and then within a relatively short amount of time, the price is back to where it started, or in some cases lower. So let's first just establish where it all started. And to me, it started when it broke out of this stubborn channel that it had been trapped below, and that was right here at 74 cents. You go back through the history of the chart, and you can see on several occasions, price just tried to get above this level and couldn't quite do it. However, the price got above it today. So again, that is why I'm classifying that as my starting point. So let's go through the definition. Price makes a really nice move. Well, it started right there, and considering it went all the way up there, I think we'd all agree that's a nice move. Second part, within a relatively short amount of time. Well, considering this all happened in the same day, I'm again assuming and hoping we can all agree that, okay, yeah, this all happened in the same day. Price goes back to where it started, or in some cases lower. Now, this is where the thin ice point comes into play, and the thin ice in our example here is right there at 74 cents, because to be fair to the bulls, the price could do something like this. It could walk along this thin ice and then all of a sudden start to head back up. And if in that event, what would that give you? Well, that'd give you a set of lows right here. Previous set of lows would be down there. You look at these as stair steps. Okay, fine. Again, to be fair to the bulls are now building overall stair steps in the upwards direction, and you got to give them credit that that potential does still exist. However, if the price comes down here, breaks through the thin ice, and worse yet, separates to the downside, what is that doing to the price? At that point in time, that's literally putting the price right back inside of this range where it already was. And again, I'm assuming I state the obvious when I say this. Truly powerful moves progress forward. They don't go back to where they were. And that's what 74 cents, the thin ice point, is mapping out. Is the price making progress, or is the price going back to where it was? So 74 cents, that thin ice point. A lot of downward momentum here, but again, you got to be fair to the bulls. Maybe they will ultimately build a higher stair step. Only time will tell, but 74 cents, a very revealing level going into tomorrow. One of the biggest questions that I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now, and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.